Mulesoft founder and now partner at Dig Ventures, Ross Mason. Ross, give me your sense of the broader landscape right now. I mean, we've got this enterprise spending drought, but we've got M&A ripping in chips and software. If valuations have gotten unreasonable, doesn't that mean that stocks with high valuations like AMD should be buying stuff?
Yeah, so good morning. Yeah, it's an interesting market because there's two things happening. One is, tech has been on a run the last 5 years. I mean, every organization is using software everywhere. So there's loads of room for tech companies to drive real revenue. So obviously Wall Street loves that. I think with the downturn at the beginning of the year because of COVID, there's been less places to put your money, right? So having a diverse portfolio has become more difficult, and tech actually returns better than almost anything else right now. So I think you've got that playing in. Plus, you've got retail investors can actually, buy in now. They can buy, without any fees associated with that purchase. The Robin Hood actually weirdly takes from the poor and gives to the rich by offering, trading at zero cost basis for the buyer. The challenge is people are buying things that sound great. They're buying Snowflake because Warren Buffett bought in. But if you look at the valuation of Snowflake, it assumes at this rate, which I think is almost about 70 billion market cap, that they have about 50% of the market share of their addressable market, which doesn't make any sense.
If you are one of these companies, right, doesn't it make sense for you to try to grow as aggressively as reasonable under these circumstances, whether that means M&A, whether that means getting the absolute best sales force? Because as you say, these valuations have to be justified based on what's going to happen 3 to 5 years from now. So these companies need to make sure they're a lot bigger 3 to 5 years from now, right?
Yes, exactly. And we're going to see a lot of that M&A action happening to buy both customers, to buy talent, and to buy into new adjacent markets, right? We're going to see that a lot. Obviously, Salesforce has been doing that. I lived that myself through the acquisition of Mulesoft, my company. And it's the right strategy, right? There's enough opportunity out there to make it make sense, but the valuations are, unless you're really looking 10 to 12 years out, the valuations are exaggerated right now. I think there will have to be a correction before institutional investors really start buying back in the same numbers they did pre-March or pre-February.
Ross, but why do you blame retail investors for these sky-high valuations? You say the biggest problem you see is that retail investors know how to buy, but they have no idea how to sell. Wouldn't it be a lot more volatile and problematic if they acted like day traders?
Yeah, no, it would. So, by the way, I put myself into the retail category. Obviously, I'm an individual investor as well. We buy things based on brand and marketing and awareness, right? And then we buy based on media darlings versus things that get slammed in the press. So obviously I think what's really happened is a lot more people are at home with a bit more.
That doesn't give them a lot of
cash.
credit, Ross.
Say again?
Are you saying that doesn't give them a lot of credit if you say things like they're buying on what they read in media reports? I mean, how can you classify this huge group of retail investors as such?
Well, I'm classing some of the new people that are investing for the first time. So not all retail investors. I apologize.
Shepard Smith here. Thanks for watching CNBC on YouTube.